Welcome to the September 23rd, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman right here on YouTube each and every week. Here we go with the big headline of the week. The strike on the Saudi oil facilities took out 5 million barrels a day of production. That's 5% of the world's supply wiped out in a single attack by either the Yemen Houthis or the Iranians, depending on who you listen to. What was the impact on the global financial markets, starting with oil? Obviously, we can see Monday oil opens up at $63 a barrel, having come from about 55, and that trend actually exacerbated what oil price trends we see longer term. I'm actually going to show you what it means longer term, but in this case we settled back down, closing the week near $58 a barrel, giving back actually most of that $8 gain. This was a historic gain, the biggest dollar and percentage gain in oil in a single day. Then we look at the long-term impact. Well, here's the baseline trend that I would draw for oil potentially. And this spike, not even as dramatic as the 2018 spike to about $77 a barrel. And then we go all the way down to 40-something dollars a barrel. A spike back to 66, and we settle out at 58 or 59. Does this mean the trend has reversed? Well, it could, but that's probably not the major impact due to the fact that the United States is now the world's largest energy producer. And from an energy production standpoint, natural gas becomes even more important with a 4% compounded growth in worldwide consumption of natural gas, liquid natural gas even more, which is why we've been highlighting the value of energy infrastructure companies as opposed to speculating in oil field service or exploration. The pipelines do pay larger cash flow. Now, let's get to the Dow Jones Industrial Average. The turbulence in the Middle East normally would have been associated with a big drop. In the Dow Jones Industrial Average, not so much here. We see just this week's activity, this being the 3-year chart, just this week's activity, we barely had even a movement in the U.S. equity markets, and part of the reason the global financial markets didn't melt down in Middle East turmoil is, of course, the Texas-based shale revolution. That's the infrastructure that we've been talking about. Why would the Dow Jones be stuck here in this range-bound market as we've been talking about? This, the 22,000 we saw at Christmas. This, the 27,000. That's 26.5. If we look at earnings, we can find out a better explanation and potentially where this goes. This data is how much money do the basket of 500 companies make after tax per S&P unit each quarter. Well, what do we see here? Well, that's a lot like the Dow, where here we're about $38, $39 per quarter, right, for each S&P unit. And we kind of fall out from under that. This is 2018. The market peaked right about here. That's about $40 per S&P unit per quarter, $160 a year for an index that costs $3,000. That's about a 5-6% earnings yield. And so now, that's called an earnings recession. And we saw it here and here. Earnings recession. We've actually been in a little bit of a slowdown in the amount of money that companies make. And that's the long-term value for those of us that actually buy things based on what they're worth longer term, right? There's a clue. Now we're back up to about $39, and that explains the range-bound market in graphic form. How much money, what's that? That's the forecast. This is right now. That's what's forecasted to happen over the next year to 2 years. I'm admitting right off the bat, or diagnosing, analysts can be too optimistic, but that's almost $50 instead of $40. Well, that would imply about 20% more earnings that is forecast over the next 24 months. We'll see if it comes true, but if you said, what's the direction of the market? That's actually not a recession yet, and that's the theme that we keep coming back to when we actually look at the data here. That long-dreaded recession, not here yet. Let's get to the Fed. The other thing that happened, Federal Reserve, all last year, raising rates relentlessly from the election point all the way to here while the Dow was going up. They raised the short rates to a maximum 2.5. That's the overnight bank lending rate right there. What happened in December? Dow went to 22,000. Now they had said we're going to keep raising rates all during 2019 because we got educated after the 1970s and hadn't updated our models for a really long time. So we have to raise rates to 3 or we're all going to die with 21% mortgage rates and nothing will happen in the economy. So they felt like they had to get to 3 to stave off inflation. Not so fast. Slowing global growth was the theme. But look at this. This is where the recession forecast hit the fan this last year. Wow. Interest rates on the 10-year Treasury and the 30-year Treasury, which are not dictated by the Fed, fell right out from underneath them. That's the inversion we heard about. Wow. Well, the Federal Reserve followed that, reversing course. Instead of raising rates, they've cut them twice this year. Not so much to be accommodated politically, but also because the global interest rates fell out from underneath them. Wow. What does it mean from here? Well, this is all about 2% no matter how you slice it. And my belief is that stuff that pays over 5% is better than 2. And it may end up going up in value because dividends have been going up. Texas Instruments, Microsoft, stocks hit all-time highs, and they just raised the dividend on both companies a substantial amount. Now, what about that recession? Federal Express, boom, slammed. I mean, that's a pretty big drop from a high, 274, all the way down to 150. Does that portend a recession? Look back here. Woo, we can't ignore that, can we? Well, UPS may give us a clue here. Obviously a light company. They haven't batted an eye on this. Part of the reason this happened, well, FedEx said we're not going to do business with Amazon anymore because they make us work too cheap. How does that shake out? Let's look at the underlying revenue in the upcoming episode of NetWorthRadio.com. Next week we'll cover, does the revenue look like a recession or not for these two companies? I'm Spencer McGowan, your financial weatherman, president, McGowan Group. Grateful you've tuned in. Be sure to subscribe because when there's big financial news that may impact your portfolio, we'll be right here on YouTube. And if you're subscribed, you'll get an alert that says we've got graphic intelligence on the financial markets. Thanks again for tuning in. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, Investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.